Scott Morrison's 11th hour housing pitch, is that viable strategy, or is it going to drive up prices as the opposition claim?
So we've got both parties with proposals out there for dealing with housing affordability. It's one of the challenges we face. And in one case, in the Labor Party side, they're talking about a shared equity scheme. And the coalition, of course, as you're describing, is talking about allowing households greater access to their own superannuation to be able to become first-home buyers. But both schemes would put upward pressure on house prices, because what we know from history, if you look through Australian policy with regard to housing, is if you give people more access to funding, it tends to feed through to stronger housing demand. And without a fix on the housing supply side, all you tend to do is capitalise that into higher house prices. So neither party is really proposing something that's going to actually tangibly target the issue that's there, which is that there isn't that it's the supply side constraints that are weakening housing affordability.
So on balance, Paul, where are you putting inflation expectations? Are they close or near to a peak, or are they going to be at a peak and then plateau? And where then does that leave the policy path at the RBA?
Well, that's a great question. And I mean, a lot of these forces are global, and we've got to watch what's going on there. I mean, we do think inflation is nearing its peak, and we do think it's going to start to come down. One of the things that's going to be at work there, of course, is we've got in mind the oil price is probably near its peak as well. So that's a global factor that we've got in mind as a working assumption. We've also got in mind that there are a whole range of cost of living measures that have been delivered to reduce the cost of living, including a cut in the excise for petrol, which of course will probably lower the Q2, take a bit of pressure out of that Q2 CPI print when it finally arrives. And then the other factor you've got to keep in mind is that with interest rates rising, with the cost of living rising, consumer sentiment weakening, we expect that Australia's growth will slow down as well. It's been very strong. There's a lot of momentum, but we think we'll lose some momentum later this year and running into next year. And that loss of that slowdown in growth itself is probably going to take a bit of pressure out of the inflation story. So despite that, the RBA has changed its tune quite substantially. They're less focused on wages, more focused on inflation. They've got a big inflation challenge that they're looking to deal with. So we think they are going to deliver sequential interest rate hikes in June, July and August of 25 basis points to try to deal with this inflation challenge. I guess where we differ from others and from the market is we don't think they'll go as far as the market's currently pricing, because we think the economy will slow down sufficiently before then inflation will peak and start to come down, and they won't feel the need to deliver as many hikes as the market's currently pricing.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.